Mr. Jonathan David, Point Bank, lending smarter.
Bill Nelson, working harder.
All right. Hey, I want to talk a little bit about construction loans. The general population has no idea. If they want to buy a lot, build a house, get an architect, a builder, they have no idea how to get that all financed. So really, I just want to kind of walk through the steps in your mind. You know, it doesn't matter in my mind whether they bought the loan or not bought the loan. Let's just assume that we've identified a piece of land and we're going to buy it and build a house. So kind of walk me through the flow chart of getting you to finance the deal so that we can start building our house.
Well, Bill, a lot of the questions that we run into on those type of issues are, you know, when do we need to have our plans completed? At what point can we close the loan when we've got the plans? And a lot of what the bank needs basically is a cost breakdown so that we can get an appraisal. We get all the financial and do all the analysis and everything, of course. But typically that's where we start the process out and going forward there.
So I've got land. I've got a drawing. We send that to an appraiser. He tells us how much that they would lend us to build that house. We've got a budget from the builder. Step one, we come to you guys, we get the money.
Right.
We close on it, we close on the loan, and this is interim financing in which we're going to convert to permanent at the end of the construction. So, having been through this several times, you know, there's lots of banks that do it. What makes Point Bank better? We talked about this a little bit before the segment started, but interest rate's actually the least important thing on this deal. Tell me why.
Well, because typically the interest is only going to be charged on the amount of funds that are being drawn at the time. So you're only paying interest on the money that has been released and has been added to the note through the process.
So month one, I might have the architect fee and the slab is poured, so I'm only paying interest on that much. So,
That's right.
So the speed of the build, and tell me about turn times on. All right, builders poured the foundation. He wants his money.
He sends a draw request in, owner signs off on the draw request acknowledging that the work has been completed. We get that in, we send our inspector out, they take a look at everything, make sure that it's up to status on where it should be. We look at, he's looking at percentage of completions, not all the time everything does get completed. So they'll let the bank know this is where we're at and this is how much, you know, we feel like should be funded at this point in the stage.
I've done a few deals with Bud Bartley Homes where, you know, we had the wrong bank, the people chose the wrong bank, and now the builder is waiting 2 weeks to get somebody to come out and look. What's your turn time?
72 hours.
Wow.
We'll have a turnaround within 72, and typically it doesn't even take that long.
So one bank could be offering 4%, but it takes a year to build the house. Somebody else could be charging 5%, and it takes 6 months to build the house, and that guy's paid a lot less money. So the turn times are important.
Absolutely. It gets the homeowner in the house sooner as well.
Do you offer an incentive if they do the interim? You know, I think the hardest thing for people to think about is, all right, I've got this loan, but now I'm going to do this permanent loan later. You know, is there a way to make that one smooth transaction with you guys?
There is, and the best way to go about that is about, 30 to 60 days prior to the completion of the house. We get them working with a mortgage company and get the mortgage company, get them approved. We're going to already have them approved when we start the interim loan, so we know that they've got a commitment, or whether or not we're going to be taking that loan out. And then,
you guys have your own mortgage branch.
We can do that, or we can keep it on the bank's book and keep it ourselves. The rates and terms are going to be a little bit different, but we offer that product, and that we have a solution there for that as well. If it's going out through the mortgage company, 30-year loan, 30-year product, or whatever the consumer desires at that point, do recommend start that process about 30 to 60 days in advance. Get them the financials, get them the application, get the information needed, so by the time the house gets completed, it's going to permanent financing, everybody's happy, and it's in there down the road.
All right.
In their new house.
So to sort of circle it all back and wrap it up, we've got buy the lot. You know, we could buy it up front, or we could tie it in with the whole deal. Then we get plans, we get appraisal, we get a budget from the builder, we secure the interim financing with you, we start building the house, we draw money as we go. At the end, the house is complete. We convert to a permanent loan with Point Bank, or we choose another lender, and the whole thing goes from there. You guys are out of it, and new guys are in.
Correct.
Okay, very good. I think that'll help people a bunch. And so to end this segment, I think I need a forecast for you. Rangers winning the World Series or not?
I hope so.
All right. Partner, appreciate it.
Thank you.
All
Appreciate
right.
it.